Welcome to Talk Tickers. We're here to give you the shortcut to understanding what went down on the Wendy's company's first quarter 2025 earnings call.
That's right. We've gone through it, all the numbers, the strategy, the outlook.
So let's unpack their performance, where they're headed, and what this updated forecast means for the rest of the year.
Okay, so let's start with the results snapshot. It was a bit of a mixed bag.
How so?
Well, globally, same restaurant sales actually dipped 2.1%.
Okay.
And that pulled down their global system sales by about 1.1%.
And what about here in the U.S.?
Tougher there. Same restaurant sales dropped 2.8%, and system-wide sales were down 2.6%.
Oof. Any particular reason?
They pointed to a couple things, some rough weather earlier in the quarter, but also they mentioned a weaker consumer environment really kicking in during March.
Right, that consumer pullback seems to be a theme, but you said mixed bag.
Yeah, because internationally, it was a totally different picture. Same restaurant sales grew 2.3%.
Oh, interesting.
And system-wide sales internationally jumped 8.9%. Real strength there.
So international growth is kind of propping things up a bit.
It's definitely helping balance things out. And despite those U.S. sales dips, adjusted EBITDA and their earnings per share actually met expectations.
Okay, so financially not as bad as the sales might suggest.
Exactly. And they kept returning cash to shareholders, over $173 million, went back through dividends and buybacks in Q1.
And they updated the outlook for the whole year.
They did, pulled it back a bit. They're now seeing global system-wide sales as flat to potentially down 2%.
Okay.
Adjusted EBITDA, they're guiding $530 to $545 million now. And adjusted EPS somewhere between 92 and 98 cents.
But they kept the growth plans.
Yeah, interestingly, they reaffirmed their net unit growth target, still aiming for 2% to 3% more restaurants globally this year, so still expanding despite the caution on sales.
Got it. So let's dig into the strategy behind all this. What are their main priorities?
They're really focused on three core things, three pillars, they call them.
Okay. What are they?
First, delivering fresh food that's always been central to Wendy's, right?
Right. The fresh, never frozen beef.
Exactly. Second, providing an exceptional customer experience.
Improving things in the restaurant and digitally.
Pretty much. And third, accelerating their global net unit growth, building more restaurants worldwide.
All right, let's take those one by one. Fresh food. What are they doing there specifically?
Well, they highlighted their sourcing, like you said, 100% fresh U.S. beef, never frozen, but also 95% of their U.S. ingredients overall are domestic.
Oh, that's interesting. Does that help with costs or supply chain stuff?
Potentially, yeah. Gives them maybe a bit of a buffer against, global tariffs and things like that. Same idea internationally, 100% Canadian beef in Canada, for example.
Makes sense.
Yeah.
What else on the food front? Innovation.
Definitely. They talked about the Thin Mint Frosty partnership with the Girl Scouts, said that drove some positive results.
Yeah, I remember seeing that everywhere. People seem to like it.
Totally. And they've got more coming. An Oreo brownie batter Frosty, strawberry Pop-Tart Frosty swirls and fusions too.
Wow, okay. Lots of sweet treats.
Yeah.
Anything else?
Big summer campaign coming up. 100 Days of Summer.
Sounds intriguing. What's involved?
Value offers across the board, breakfast drink deals, they're redoing their coffee and cold brew lineup, and a Taki's collaboration.
Takis? Like the spicy chips?
Yep. A spicy chicken sandwich and Taki's Fuego fries, clearly going after a certain demographic there.
Definitely sounds like it. Plus digital deals.
Yeah, app deals, National Friday specials, and something with an entertainment property plan for the fall. So lots of menu news.
Okay, moving to that second pillar, exceptional customer experience. What's the plan?
They've launched this new operations vision called the Model of Excellence.
Catchy name. What does it mean in practice?
It's about standardizing the best ways of doing things across all restaurants. More focus, more resources, better training using tech.
So getting everyone on the same page.
Exactly. They're also doubling the number of times they visit restaurants each year to check on things, benchmark performance. They said early results on training are looking better.
And technology plays a role here too.
Huge role. Digital menu boards are rolling out, and that fresh AI order taking.
Oh yeah, the AI voice assistant. How's that going?
They're aiming for over 500 restaurants using it by the end of the year. They say it's helping increase check sizes and making things more efficient.
Interesting. Any impact on accuracy?
They hope so. They're also rolling out label printers for menu items and smart scales for delivery orders specifically to tackle accuracy. So those are showing big improvements already.
And the app. You mentioned digital earlier.
Yeah, they're adding things like gamification, more personalized messages. They claim record high app engagement now, and digital sales are over 20% of the mix.
Okay, that's significant. So pillar 3, accelerating global net unit growth. How's the expansion looking?
Pretty strong, especially internationally. They opened 74 new restaurants globally in Q1.
Wow, in just one quarter.
Yep, and over 60% of those were outside the U.S.
Where are they seeing the most growth?
Record openings in Canada. They hit their 500th restaurant in the Asia-Pacific, Middle East, and Africa region. And Australia is apparently doing even better than they hoped.
What about the U.S.? Still growing here.
Slower, but yes. 28 new restaurants in Q1, including 8 company-owned ones. They seem confident they'll hit that 2% to 3% overall growth target for the year.
And securing future growth, too.
Seems like it. They signed a new deal for 25 restaurants in Guadalajara, Mexico, and another commitment for 30 more in Chile. So the pipeline looks healthy.
Okay, let's swing back to the financials for a second. You mentioned adjusted EBITDA met expectations, but what about margins? Any pressure there?
Yeah, there was some. Global company restaurant margin was 14.3%. In the U.S., the company operated margin was 14.8%.
How does that compare?
That U.S. margin was actually down 50 basis points compared to last year.
Why the squeeze?
Mainly sales deleveraging lower sales volume hurts margins, plus higher commodity costs and wage inflation. They did offset some of it with better labor productivity, though.
And overall revenue and profit?
Adjusted revenue dipped a bit to $423.1 million. Adjusted EBITDA was $124.5 million, down slightly, mostly because of that lower revenue and also higher G&A costs.
G&A. What's driving that?
Investments, mostly in technology and those operational improvements we talked about.
Gotcha. And adjusted EPS?
Came in at 20 cents, which was down 3 cents from Q1 last year.
Okay. And you mentioned they changed how they define free cash flow.
Yeah, a small tweak. It's now net cash from operations minus capital spending and minus these investments they make in build-to-suit locations for franchisees.
Okay. And how much free cash flow did they generate under that new definition?
About $68 million in Q1.
And what are they doing with their cash? Capital allocation priorities.
Still the same basic plan. Invest in the business first. Pay the dividend. They announced another 14 cents per share for Q2.
Right.
Keep the balance sheet strong. They have about $335 million in cash, net leverage around 4.5 times, and buy back shares.
They bought back a lot in Q1, right?
Right. They did, $124 million worth, about 8.2 million shares. And they've bought back more since the quarter ended. The plan is to return up to $325 million to shareholders total in 2025 through dividends and buybacks.
Okay, so that updated financial outlook for the full year, it really reflects those consumer worries, doesn't it?
Absolutely. That flat to down 2% system sales forecast, the margin guidance around 15% plus or minus half a point, the 92 to 98 cents EPS, it all factors in that weaker consumer they saw in March.
And they expect that weakness to stick around.
Yeah, they explicitly said they expect the current consumer pressure to persist through the rest of the year. That's baked into the numbers now. They're also assuming about 2.5% commodity inflation.
Did they give any more color on which consumers are pulling back?
They did. They specifically called out households earning under $75,000 a year. Said they saw industry traffic drop pretty significantly in that group during March.
And breakfast wasn't doing as well.
Correct. Breakfast performed worse than the rest of their day parts. So definitely seeing pressure, particularly at the lower end and in the morning.
How do they see themselves compared to competitors in this environment? Are they losing ground?
It's interesting. They said they actually maintained their traffic and dollar share in the U.S.
Oh, okay.
But they did acknowledge some competitors saw better performance in March and April. So maybe some share shifting is happening.
So what's their plan to fight back or keep their share?
They believe their strategy, the focus on the core menu, value offers like the summer campaign, those collabs, innovation, and just improving the customer experience, that's what will win out.
What about their franchisees? Are they feeling the pinch too?
Likely, yeah. Wendy's is rolling out a new P&L benchmarking tool for them. The idea is to collect monthly data from each restaurant.
To do what?
To share insights, figure out best practices, and ultimately help franchisees improve their own profitability. They said they'll give an update on franchise cash flow on the Q2 call.
Okay, good to know. Now, the chicken sandwich wars are always raging. Any updates on Wendy's chicken strategy?
They mentioned it specifically, said they plan to take a holistic look at their chicken menu.
Meaning?
They want to innovate and deliver what they think will be the best chicken sandwich out there. More details apparently coming later this year, so Watch that space.
We will. And that fresh AI, you said it boosts checks and efficiency. Are those the main benefits they're seeing?
Yeah, those are the key ones they highlighted. Increased check size, better order accuracy seems to be another one, and just general restaurant efficiency gains. That rollout to 500 plus locations this year is pretty ambitious.
You're finally back to breakfast. Besides the value deals, what's the innovation plan there?
Right now, the focus seems to be beverages. That new cold brew coffee lineup launching this summer is the big news.
So coffee upgrades.
Yeah. But they did say continued breakfast innovation overall is a long-term priority. It's just the beverage platform getting the attention right now.
Okay, so wrapping up this deep dive on Wendy's Q1, it feels like a story of two halves almost. International doing well, U.S. facing headwinds.
That sums it up pretty well. The international strength is definitely a key positive, buffering some of that domestic softness from the cautious consumer.
But they're sticking to their core strategy: fresh food, customer experience, global growth.
Yeah.
And still returning cash to shareholders.
Right. The updated guidance is more cautious, acknowledging reality, but they aren't cutting back on the strategic investments, which signals they're playing the long game.
All right, let's shift gears slightly. Time for our This Is Not Financial Advice segment, thinking about Wendy's pushing value, the Taki's collab targeting younger folks. What's an out there, but maybe plausible trade idea?
Okay, all right. So Wendy's wants value-seeking consumers, maybe younger ones grabbing that Taki sandwich. Where else might that demographic spend a little extra cash if they're saving on lunch?
Good question. Entertainment?
Maybe. How about energy drinks? Think about Celsius Holdings, CELH. It's super popular, especially with younger crowds, Gen Z.
Okay, I see where you're going.
If Wendy's value deals and trendy collabs actually get more feet in the door, maybe those same consumers treat themselves to an affordable energy drink like Celsius alongside it, or just generally feel they have a bit more cash for those kinds of small indulgences.
So a complementary play. Celsius benefiting from the same trends Wendy's is trying to tap into.
Kind of, yeah. Or think about their international growth Canada, Australia doing well. Maybe a long position in an agricultural commodity ETF focused on those regions, if their demand stays strong there.
Like betting on Canadian beef prices or something?
Sort of, yeah. Finding an ETN or ETF that tracks agricultural products sourced heavily there, like maybe something similar to the old FUD ticker, but you'd have to research current ones. If Wendy's International keeps booming, the demand for ingredients from those places grows.
Okay, definitely unconventional links there between fast food performance and energy drinks or regional commodities.
Exactly. Purely thought experiments, connecting some dots, and definitely not financial advice. Just getting you thinking.
Absolutely. So that's our look at Wendy's latest quarter. A complex picture, but a clear strategy remains.
Yeah, balancing consumer pressures with international growth and operational improvements. Execution will be key.
What stood out most to you from this deep dive? As always, do your own research and see how it fits your perspective.
And join us next time on Talk Tickers, where we'll break down another key earnings report.